Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. With the end of the financial year now behind us, attention turns to the year ahead. And for many small and medium-sized enterprises, it's a chance to really get organised and set themselves up for growth. Natalie Lennon is the founder and director of Two Sides Accounting. She also does a lot of work with Xero, a great supporter of this podcast. Natalie, welcome to Fear and Greed.
Thank you, Sean.
Now, I want to talk about the year ahead, but do accountants get as stressed as people and small businesses do up to June 30, or are you guys just cool as it comes?
Oh, we're very stressed. We're very stressed trying to help all the businesses get prepared for the end of the financial year. A lot of people leave it to the last minute and they pop up and they say, Natalie, I need to get in. I need to see you. We need to speak before 30th of June. So, yeah, it's definitely a very busy and stressful time.
Okay. We sit here in early July. What can a small business do now to set themselves up for success for the rest of the year? Because as you said, most of we small businesses get in touch with our accountant at the last minute in a panic, right? I'm sure you'd prefer us to ring you on the 2nd or 3rd of July rather than the 2nd or 3rd of June next year.
Maybe not the 2nd or 3rd of July. Usually accountants like to have a little break first before we start the runway to the crazy season again. But generally starting to think about being organised and not waiting to the last minute. So if you're running a small business and perhaps you don't have any accounting system, you might look at getting an accounting system like Xero. You might look to organise your receipts, so probably not have them in a shoebox. We don't want you to turn up.
Do people still do that in a shoebox?
There are some. We don't deal with those clients. We send them off to H&R Block. I think they're probably one of the only accounting firms that are still happy to take the shoebox of receipts. Yeah. But it's not efficient. You don't want to be paying your accountant to go through your shoebox of receipts and organise it. You want to try and do that yourself, especially with the cost of living and the cost of everything going up. You want to save costs. So the more organised you can be before you go to your accountant, the better.
Okay. Are most people better now than they were? I mean, I know most of us are beyond the shoebox thing, but do most people use software that can easily be downloaded?
We do find that businesses have gotten a lot better ever since COVID. I know we don't like to talk about COVID 5 years on, but COVID definitely forced a lot of small businesses to get on some sort of software because they couldn't apply for the grants. They didn't have their up-to-date figures to be able to submit for JobKeeper and all the other grants that were available. So we definitely saw a push for people getting onto Systems Zen, which is fantastic, and definitely seeing a lot more people even just using Excel as a minimum, rather than having to keep the shoebox of receipts.
Yeah. Tax, to me, scares the bejeebers out of me. I'm being honest. I hate doing it. I put it off. Eventually my accountant says, hey, it's kind of May the year after it's, and says you need to get and I do, but I'm always paranoid that I'm going to do something wrong.
Yep.
And often I'm doing it, certainly not deliberately. I'm actually more worried. I'm too conservative in some ways. And I think some of the Xero research suggests that. Should we be worried about it? Is the ATO the ogre that we seem to make it out to be?
Look, generally if you're making a small mistake and it's not, fraudulent, you're not setting out to claim something that you really know you shouldn't have and it's a really high dollar value amount, then you're okay. They're pretty good. What they will do is they normally data match. So when you do your tax return, you put in what your occupation is, and they'll usually data match that across different tax returns of people in your industry, and they'll compare the types of deductions and things that you're putting in. So if your return looks quite different to those, they'll reach out and they'll say, hey, Sean, we've had a bit of a look at this. It doesn't look right. And they give you a chance to sort of fess up, go, oh, look, I've made a mistake, maybe go to an accountant, get them to look at it and amend your tax return. But if you don't amend your tax return at that stage, then they might start to, actually do an audit. But they're generally pretty good. So you don't need to really stress that you're going to, end up in jail or get into a lot of trouble if you make a little mistake.
I must say, I have used the self-help line and they're fantastic on that. If I use an accountant, am I better off with the ATO?
I wouldn't. Well, I'm an accountant, so I always say yes, you are better off 100%, absolutely. But if your tax affairs are fairly simple, the average salary and wage earner, a couple of deductions here and there, and there's nothing that you're really questioning, then you could probably do it yourself in MyGov and there'll be no dramas. But if it's a little bit more complicated, you've got more deductions, maybe you're claiming a motor vehicle, you've got work from home, you've got a rental property, you've got other investments. It's always good to speak to an accountant to make sure that everything's being captured and done the right way.
If you shift this to small businesses, what are the main things they have to keep an eye on in terms of when they're doing their tax?
So small businesses, I would always recommend to speak to an accountant because there's a lot of different nuances that small businesses, wouldn't be aware of. So one example would be the immediate asset write-off, which the incoming government has promised they're going to legislate to extend it. So that's the $20,000 immediate write-off for assets up to $20,000. You claim it as a one-off rather than over what we call the useful life and depreciate it. So that could be quite a big tax deduction that if you're a small business doing your own tax return, you might miss. So definitely speaking to an accountant just to make sure that everything is going through as it should.
Stay with me, Natalie. We'll be back in a minute. My guest this morning is Natalie Lennon from Two Sides Accounting. We've just gone past the end of the financial year. Now, off air, I was talking about a website, business.gov.au, which lists all the changes that kick in on the 1st of July. How do businesses keep across that stuff? And we're talking superannuation, instant asset write-offs, the whole gamut.
Yep. Look, it is very hard to keep on top of. Even as an accountant, we've got to keep up with what they're just talking about in the media, what is promised. So, for example, like we said before, it's been promised in the election, not legislated yet. So then what's legislated and then what date it comes in. So there's certain things that the government promised in the election that are not coming in until next financial year. So people will forget about that. So I guess just, like anything, the more you can read. So, if you're looking at news articles, keeping up to date, if you have an accountant, then I would assume that, you're receiving a newsletter from your accountant, following them on social media. They're going to be your best source. But, like anything, just the more things that you consume that you see out there, the more equipped you're going to be. But to be honest, like I said, the accountants even struggle to keep up with it. So as a business owner, I wouldn't be stressed if you think, oh my God, there's so much, I just can't.
Yeah. In terms of what small business needs, so we talked about instant asset write-off. Are there other, legislated or not, that given what you do for a living, you kind of think this would really help small business?
So as a business owner, I would recommend, well, I know we're on the other side of the financial year, so it's a bit late now, but for next financial year, have a think about whether you want to put extra money into your super fund because you're going to get a tax deduction for that, but also potentially looking at if you've got ATO debts, because from 1st of July this year, the ATO's decided that you can't claim any interest deductions for interest paid to the ATO on your interest debts. So you might want to look to be refinancing those debts.
So I'm going to try and put that in terms that I understand. If I owe $100,000 to the ATO and they're charging 10%, that $10,000, that interest was tax deductible previously?
Correct. And not
but
anymore.
It's not anymore.
No, not from 1st of July.
So that's quite a deduction that you're not going to have.
Yep.
Okay.
Yeah. So you want to be looking to probably refinance that so that you can claim that deduction. So that's probably a large one. And look, in my experience over the last 12 months, we've seen quite a few businesses take out payment plans with the ATO. So I'd imagine that's why the ATO is also doing it, because they're losing too much revenue in letting people claim that as a tax deduction.
And has that kicked in now?
1st of July, yes.
Right. So I will be paying if I'm not. And that's for individuals and...
Yes, right across the board.
Okay, so I'm just sort of Xero have done some work in the tax time true or false. They talk about it and things like anyone can be audited by the ATO, yes or no?
Yes.
Righto. Can I claim, this is one I've won, an expense from past financial year, this financial year, because I forgot about it last time?
No, you would have to amend your return from last year.
That's no good.
Yeah.
I have to pay tax on every single dollar I earn?
No.
Right.
You get the tax-free. Most individuals get the tax-free threshold.
Okay. If I do it myself, the deadline to lodge my individual tax return for the previous financial year is 31 October. And the corollary with that is if you use an accountant, it's later. I think it's May.
Yes, correct.
Good. If I don't earn any income in a financial year, I don't have to lodge a tax return. That's a good one.
Well, technically you don't have to lodge one, but you probably just should lodge a nil in your MyGov, because if you don't, the ATO may chase you up for it.
Okay.
Yeah.
All business entities in Australia pay the same tax rate? That's a no, isn't it?
Yeah.
I know that one. Anyone can claim the instant asset write-off?
Small businesses.
Only, righto.
Yes.
You can claim the tax-free threshold on your personal link. If you have two jobs, you can claim it on both?
No, once.
Damn. The money I spend on tax deduction reduces my tax bill by the same amount?
Incorrect.
So it's actually just the...
So it depends on your tax rate. So the average Australian tax rate might be around 20 to 30%. So 20 to 30 cents in the dollar for every dollar you spend.
Okay.
Yeah.
I don't need to keep receipts or records for any tax-deductible purchases under $100.
That is a bit of a curly one because there's certain things that you can claim without receipts, and there's some things that you do need receipts. And then if you go over the $300, there's like a $300 limit. If you go over the
Right, so it's
a little bit more
tricky.
complicated than that. Yes.
My final one, which I must say I got wrong on this one. You've been 100% so far, Natalie. So all businesses in Australia are required to register for GST.
Incorrect.
That's right.
Yeah.
Depends on
their turnover
and things like that. Natalie, thank you for talking to Fear and Greed.
You're very welcome. Thank you for having me.
That was Natalie Lennon, founder and director of Two Sides Accounting, here with Thanks to Xero, a great supporter of this podcast. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, business news you can use. I'm Sean Aylmer. Enjoy your day.